And now I'm going to invite our next speaker. And this is going to be a keynote address on Angel Investing 101, Alternative Investment and Supplementary Income for Realtors. May I now invite Mr. Samir Chopra, the former Vice Chairman and past President NAR India, on stage, please.
Hi, can you guys hear me? Can anybody hear me? I still can't hear you guys. I'm hearing no's from here. So at least you're hearing me. Good. My name is Sam Chopra. I'm a chartered accountant, which is a CPA for those that have come from outside of India. And I'm most importantly a realtor, and very proud realtor at that. Been with the National Association of Realtors for the entire duration that it's been there. I remember I missed the first convention because I went to the US to sign up a contract with the company that I was representing at that point of time, which is Remax. Then I moved on. And I'm at present exploring what to do. So I haven't decided and I haven't figured out what I'm doing in real estate. But I've had the opportunity of being an office bearer with NAR India and on the managing committee on the board for the last 15 plus years. Most importantly, taken various roles, one of them being the president and then post that the vice chairman until a few years ago. And then I've had the incoming presidents every time giving me a role where I'm looking after certain parts as the ambassador, trade affiliations. So that's my background. I will talk to you about the importance of doing something else other than just real estate in your business. And I'll tell you why and what's the reason I thought of this. By the way, I've got so much of trust coming in from the president, the new president, that I kept asking him, kis cheez ke baare mein bolu? And every time he said, just choose whatever you want. I'll let you know. And then finally, he was kind enough yesterday to tell me, why don't you speak about angel investing, which I have a passion for, so I will speak about that. The biggest advantage that I've had is that my name, Samir Chopra, brought in 2 Samirs into the board and 3 Chopras into the board at NAR India. So we have Samir Arora, Samir Chopra, and of course 3 Chopras, including the current president. So please give us all a big hand. So we all are into real estate, and obviously in real estate it's important that we have a defined income. We know there's a particular asset class that we work on. But what if there is a slump in the market? What if there is another COVID? And COVID is good for us, but what if it is different? When I say good for us, for realtors in terms of the pricing, in terms of sale, in terms of secondary homes, in terms of resort homes, and essentially in terms of the market hotting up. But what if it is different? So how do you sustain your livelihood? You've got to have alternate forms of income. So that's where I started going in. I had the advantage of setting up 11 different companies that I'd founded over the years. So I've invested in 11 companies which are self-founded. And I've also had the advantage of investing in 23 companies over a period of time. Some have got absolutely pulverized and I made no money, in fact, lost all that money. And in a few of them, I've made some money. So the importance of investment, the importance of class of assets, what are you doing? You're actually helping people as realtors, or if I may use the word, I'm not going to use the word realtor because realtor is only for real estate. I'm going to say as intermediaries. So we guys are intermediaries who are helping people invest in a particular asset class. That's what we do. For example, as a realtor, what you're doing is you're making people invest into what? Into residential, into commercial, into industrial, into warehousing, into fractional, or God knows what all. So the same way, broaden your horizon and say that, listen, I'm not only about real estate, I'm also about other class of assets. So today, what I'm going to speak about is essentially why startups are the new asset class. I'm going to talk about startups and angel investing. What is a startup essentially? I'm going to tell you a little bit about startups. Some of you do know, but a lot of you I'm sure do not. What is the startup ecosystem? What are the opportunities for us as realtors or stroke? Realtors, again, is not the right word, as intermediaries. And angel investing 101, essentially. So, direct conversations and then the Q&A if we have time for it. So why startups are the new asset class? This is what the Indian ecosystem looks like for investment. So if you see carefully, property is almost 50%. So this is huge. We're in the right business for sure as realtors. But can we have secondary income in a secondary investment opportunity? And this is what it is. So look at gold. Now, obviously, you're not going to tell somebody you can buy gold from here versus there. So gold is gold. So bank deposits, again, 15 and 15% go to gold and bank deposits. Insurance funds. Insurance is an opportunity for you. Provident fund, pension funds can be an opportunity for you. And then equities. Now look at equities. If you look at equities carefully, 5% of the entire investment class is equities. And 5% of that only goes into startups. So imagine the opportunity. And then also think about it that this is a class which is already governed for so many years. RERA has just come about, right? But look at SEBI. SEBI has been there for so long, well regulated. And for those who may not know, SEBI is Securities Exchange Board of India. The whole ecosystem is overseen by SEBI and the ecosystem of AIF. What is AIF? Alternate Investment Funds. So anything which is not real estate, anything which is alternate, in fact, real estate can also be that, out of equity goes into AIF. And we're targeting HNIs. And I'm going to tell you how much money you can make through this brokerage or the intermediary business that you do. And essentially, some of the people that I met today itself, for example, we have from Naridco, Ananta Raghuvanshi. She actually represents and is the founder of Naridco Mahi. And through the kindness of NAR India, I'm on the board of Naridco. So I meet her regularly there. And they've started up a fund. So I'm a student of this business. It's not something that I've done. I'm a real estate agent, as you know. But as a student, I've learned something from Naridco Mahi, they have something called Dolphin Tank, so picking up something from there. There's an organization called India Accelerator. I work with them, so I understand business from there. They have funds, so I work with them. There are companies like Brightbridge Advisors. I've been doing due diligence as a chartered accountant for portfolios that they invest. So my information has come from these places. There's a company called Intin, which does market research. So information has come from various people. And like I said, I'm a student. I'm not an expert about this business. What I'm going to tell you is some of you may know a bit of it. Some of you may know much more than myself. So pardon me if you have to hear things that you already know. Note that carefully. Investment in security markets is subject to market risk. Obviously, you've heard this on the radio also when people are just saying it, fastest finger first kind of statements. Read all the documents carefully. So you have to do that like you do in property. Most of you trust the developer and say, and we have a herd mentality, unfortunately, we all go and sell the product. What about the property documents? You don't see the property documents. Nobody does due diligence. Who does a title search, etc. But it's always good to do it. Similarly, when you help somebody invest in a portfolio or in a company specifically or in a fund specifically, read those documents, because you are doing it not only for yourself, for your clients as well. And by the way, you can invest yourself also. It's that lucrative. So the overview of the entire ecosystem is, $500 billion by 2025. There's a cumulative year-on-year growth of 26%. India has added 23 unicorns and 100 plus unicorns in the last year, and so on and so forth. So I'm not going to bore you with these numbers. But look at this carefully. State of the Indian startup economy. DPIIT recognized startups, there are 84,000 of them. 5,000 funded startups. 9,300 plus active investors. Listed new age tech companies, 18. This is all in the year 2022. And almost 9 lakh jobs to individuals. 108 unicorns and 100 plus unicorns. So what is a startup essentially? Just to give you an idea what a startup is. So startup should, this is what the government gives. So basically, you do not have to have an entity which is over 10 years old. It should be incorporated either as a private limited company or a LLP or a registered partnership. The turnover should be less than 100 crores, which is obviously, if it's a startup, it's not going to be sitting on a few $1 billion. It should not have been. It should not be a company which is split into two or de-amalgamated, de-merged, and therefore come up into pace. And it's got to be innovative and it's got to be scalable. That's why it's a startup. The crazy thing is that those companies are startups. If you look at Paytm, Ola, Make My Trip, Book My Show, Snapdeal. Now, don't you feel that had you invested in these companies at the seed stage, or even in Series A, Series B, etc., the kind of money that you could have made? And I'm going to show you these as examples. So who runs a startup? Look at this. If you look at this carefully, this could be any one of you guys. So you could be a startup owner also. Okay? They're no special people. I mean, they are special because they're right there, and they've been part of the Shark Tank, etc. But look at Anupam Mittal, Shadi.com, Namita Thapar, MCure, Dipinder Goyal, Zomato, Vinita Singh, Sugar Cosmetics, and Aman Gupta, Boat. Now, these are ordinary people who had great ideas, thoughts, had the courage to make an investment. They made that investment, and boom, it grew. And then there were believers and non-believers. Some people scoffed at them and said, "Bekar hai, kuch nahi hai, we won't be, what's the point of investing in them?" Or some people were just ignorant about investments because we never had this conversation. And then there are people who actually invested in these businesses which went crazy. You know what the valuations of all these companies are? These are the kind of startups. Can you believe that all of these are startups and you use each one of these companies in your day-to-day life? Is that right? Who hasn't used Zomato, for example? I'm sure some of you have used Zomato to even get midnight food right sitting in this hotel because you missed out on the food. Or you were too drunk to move out from your room. Is that right? So Zepto, I'll give you an example of Zepto. You'll find it crazy. So I had this time when there was nobody in my house apart from a maid who was sitting on the ground floor, and I was sitting in the basement. I was watching TV. Everybody was out, and I wanted to eat a chocolate. I didn't have a bell. I was lazy. I did not want to walk upstairs to the ground floor and go to the refrigerator and take it out. So what did I do? I opened Zepto. I clicked. I wanted an Amul dark chocolate. That was for 130 rupees, but they were doing a deal on it. It was for, I think, 86 rupees, if I'm not wrong, a large slab. I ordered it. In 10 minutes, it was at my home. The guy rang the bell. I'd already paid for it. Now, my maid didn't know what to do with it, so she brought it downstairs to me. I did not have to get up from my cushion. I got free delivery into my room, and I paid 86 rupees, which means I got a discount on that. Because I was a lazy couch bum watching television. There was a cricket match going on, which is very dear to me. So I was watching that, and I got service in my room. That is what Zepto does. So imagine all these opportunities are there. Had you invested in them, you wouldn't be sitting here, let me tell you that. But you still will be sitting here, though. So startup ecosystem, what are the people? So essentially Oyo, as an example, is a startup. Do you all connect with Oyo? I can't even hear you guys. Okay, great. Do you connect with this gentleman? Who is he? Great. This is an incubation center. So the ecosystem has 6 players really in it: startup, founder, incubator, accelerator, angel investor. Can you imagine that Mr. Sanjeev Bikhchandani, the big daddy of startups, who's incidentally 2 years senior to me in school, but see, when you make so much money, you lose all your hair also. So, no, he's a good friend, so I can say that. Sorry? But I'm not making the money. And then you have venture capitalists. Sequoia, obviously everybody knows Sequoia. If you don't know Sequoia, you come to me, we'll do a one-on-one. Not a 101, but a one-to-one on angel investing. PropTech startups, I've just picked up some random names. There's so many, hundreds of them in India and overseas. But look at the money that these guys have made. And the kind of funds that they've raised. 85 million for PropTiger. Okay, who are the investors? You have SoftBank and News Corp investing in them. Okay. Zillow, I think everybody knows Zillow. This is just the initial rounds I picked up from one of the websites, which said 87 million in 5 rounds, and the last round was for $130 million. It's just an idea. And it's been replicated in India also. Maybe successful, maybe not, but it's been replicated. Magic Bricks put in $300 million was put in by Times Internet, right? So what are the forms of funding? What stage do you fund at? So I'm giving you 6 different places, okay? So there are stages of that funding process for a startup. One is the ideation. So there's a lovely idea I have, a thought. Then there's pre-seed, where it's a family and friends round. Somebody's putting in money because they believe in what I do, because I have the credibility, etc. Then there's seed capital. The seed capital is when the minimum viable product has been created. So you have an MVP, a minimum viable product that has been created, and you say, oh wow, this is worth investing in. Otherwise, it was all conversation, thought, a product, and now an idea, and then actually a product. Bridge round. So bridge round is when somebody's almost getting in the money and you're putting in, you're bridge financing it. So that's a bridge round. Series A. Now this is the time, this is the real time where the company gets further investments from VCs, from family offices, and there are follow-up rounds, and each round becomes a Series B, Series C, Series D, etc. And then, of course, when you become a big daddy, you go in for an IPO. And by the way, post-IPO also, you can go through series of funding. Now, what is the opportunity for us? This is the greed factor that we have. What's in it for me? Why are we listening to this guy talk for so long? Can we make some more money, or is he wasting our time? So, this, according to me, and I may be, overzealous in this, but this is, according to me, what are the opportunities. And I've shown the maximum opportunities, not the minimum opportunities, so that's a caveat that I'm telling you. The monetary compensation that you can get by when the investment goes in by us as intermediaries on behalf of a client into a fund. It could be an alternate investment fund like an angel fund. Now, when the money goes in, it goes and we get some fee out of it. So what are the fees that we can make as an advisor? A short-term transaction fee and success fee. These are two things that you get. One you get from the startup, one you get from the investor. It's like this in the secondary market, when you sell a house, and if you're the only broker, and you're doing the buy side and the sell side, then you get commissions from both. You can get commissions. Certain states don't have that culture. But the same way, there's a transaction fee and a success fee. And on the long term, there is something called a carry and a management fee. A carry comes when there is profit in that investment because you guided somebody. So remember, in real estate, do you get carry? And why don't you get it? Ashish, why don't we get it? Sorry? डील हुआ खत्म हो गया आपको कमीशन मिल गया उसके बाद खत्म हो गया ना बात यहां you get a carry and you also get a management fee, a percentage of the management fee. This is what the table looks like. So I've just depicted, and this is, let me tell you something, this is more of early morning hallucination by me. So the numbers could be half of this. But I'm just trying to build greed in you to say that let's go into this business. So think about it this way, the transaction fee. Transaction fee, you can get up to 3%. This is up to 3%. These are all maximum numbers, not minimum. I'm putting in a caveat here. 3%, and I've said the total amount is 1 crore. Hypothetically, if you have 1 crore of rupees, from that crore of rupees, you help somebody invest that crore of rupees, and he keeps it for 3 years. Let's say that there is an exit option available at the end of 3 years. He may exit, he may not. But these are all assumptions, suppositions. Okay? So transaction fee of 3%, amount charged is 3 lakhs. If you see the assumption below, transaction fee is charged from the investor and success fee is charged from the startup. Two sides, the buy side and the sell side. So hypothetically, transaction is about 3%, success fee is about 4%. Who gets this? You get, out of the 3 lakhs, you get about 50% to the realtor. When I say realtor, we are an intermediary. I'm using the word realtor for you to stay connected to it. But as an intermediary, and you can get 1.5 lakhs there. Okay? Who have you got that 1.5 lakhs from? From the investor. 1.5 lakh की बात कर रहा हूँ यार. सुन लो please, investor. So 1.5 lakh रुपया आपको investor से मिल रहा है because you have to make an investment of 1 crore. Success fee again can be between 2 to 4%. I've taken 4%. 2.4 lakhs you can get from the startup for this transaction. These are small amounts, right? You anyway get, I know people who say I get 10%, 12%, 15% as brokerage. Great. So if you were to add these two, this is only 7%. So you'd say, what's the big deal? But the big deal comes below in the carry. So think about it this way, that so what is carry? Carry is the amount that you can get, which is normally around 20%, which the fund gets actually, 20% of the profit that is available. So what is the profit here? Supposing the amount was 1 crore and he has a 4x on his portfolio, not a single share or not a single startup, but say he's got a portfolio of startups, say 10 of them. And out of that, he gets an average 4, because out of 10, maybe 3, 4, 5, 6, 7 may die. There might be only 1, 2, or 3 which survive. But because of the galloping investment benefit that you get, it can be an average of about 4x. So imagine 1 crore goes to 4 crores. So if it's 4 crores, 1 was the initial investment. So what's the additional benefit that he's got? 3 crores. 20% of that 3 crores is 60 lakhs. So 60 lakhs is what the fund gets to keep when that exit happens. Now that 60 lakhs is also shared with you. And it is shared between 30 to 50%. That means you can get from 18 lakhs to 30 lakhs. I put the higher figure of 30 lakhs there. This is the cream. So this is an alternative investment, alternative class of asset, but an alternate income that you can also have to cover up your base, because you have high net worth individuals, you have clients, you have great relationships, and you can build this business for yourself. And then there's the management fees. The fund charges a management fee. They charge about 2% per annum. And they share up to 50% of that with you. So in a period of 3 years, every year, this is per annum, so you're getting 1 lakh per year, 3 lakhs. Now look at the figure below. Can you read that figure below? On an investment that you helped somebody do 1 crore, what is the maximum possible? You might get 1/3 of it, but what's the maximum possible you can earn? I can't hear you guys. 36.9 lakhs. Does it sound sort of interesting? क्या यार? तालियां मारो इस चीज के लिए. 36.9%. I've never got it in a period of 3 years over 1 crore of somebody else's money where I've only suggested him put money here. Obviously, the suggestion is on what? When you sell real estate, you not only have a fiduciary responsibility, but you have a moral responsibility, and you have obligations, compliances, etc., to ensure that you give the right product to the right person. The same way you have to do it here also. This is not a Ponzi scheme. This is something which you have to do with all necessary compliances in mind. And like I told you, SEBI is a facilitator and a monitoring agency, so you have to be very careful on that. So startup asset, okay, my time's getting up, so I'm going to rush through. There are 3 kinds of basic risks there. One is a holding period. So you have to hold the asset. So remember, your client has to hold an asset, or if you invest yourself, hold the asset. Don't do a 6-month, 1-year, 2-year exit. Stay till the time they actually go for a next round. Liquidity, if you want money out immediately, you can't get it out so easily. And finally, not every venture succeeds. 1 out of 10, 3 out of 10, 3 out of 7, you're lucky. But it all depends on the kind of filtering you do and the kind of due diligence that you've done. You know this guy? No? You should have known him, man. You should have invested with him. 2009, he invested 10 lakhs in Flipkart. 120 crores in 9 years. This is what he's made, Ashish Gupta. Okay? I've removed a few of them. Exit strategy, forget the M&A, etc., but either a secondary sale or a subsequent funding round, you have an opportunity to exit. So that's your liquidity strategy. IPOs, etc., come later, but the second and third one, subsequent funding round and the secondary sale is what you can do. What is the investment strategy? When you do a strategy for yourself or for your client, you've got to be very careful of what you do. Firstly, go wide. Don't do a single property, a single startup investment. Go into 10 different kinds of investment, 12 different kinds, so spread thin, go wide. And the second is do a high quality filter, proper due diligence paperwork, credentials, see his track record of the founder and so on and so forth. I'm giving you a few quick slides to show you. This is Matter, an EV bike. Look at the valuation. Funds raised only 38 crores, valuation 600 crores. In less than a year, 2,400 crores, 4 times. Who's invested? Info Edge and Dholakia. Eternal Machines, it's a CNC, automatic CNC, equipment, machinery, whatever. Valuation, it's gone 1.25 times, 160 crores to 200 crores. ERB, it's a finance entity, credit card, insurance, investments, loans, etc. 6x, from 40 lakhs initial fund raised, 15, and in 2 years or 2.5 years, they've gone 6x. This is the ideal startup portfolio. This is something similar to what I have done. So I'm just sharing with you. The numbers are, the 2.5 million is not the accurate number for me, but this is what my pattern looks like. This is what you should endeavor to reach. If you put in 25 lakhs, 2.5 million, the multiplier, an ideal multiplier is 4.1. If you've done 4, you're highly successful. You've done 7, which some people have, which is fantastic. You've done 1 or 2, or you've made a negative one, then I'm sorry, I feel bad for you. What's the portfolio value? It's gone up 4.1 times to 10 million, which is 1 crore. 25 लाख का 1 करोड़ हुआ। कितनी इन्वेस्टमेंट करी थी? 7 इन्वेस्टमेंट्स। एग्जिट कितने मिले? Exit क्यों मिले? Because a new person was coming in. When new person was coming in, he was buying it at a more higher rate. I saw the difference. I saw the delta. I said, why don't you buy my shares? So I exited. 3 of them I've exited. Average holding period was only 3 years. Now it could be 4 years, 5 years. I said, you know, you've got a liquidity you have to be careful of. But 3 years, this is what the portfolio was. Okay? Thank you very much. This is my LinkedIn code. You can connect. You can scan and connect with me on LinkedIn and read that note carefully as fast as you can. Any questions from you guys?
Yeah, let's take, there we have one question there. We're going to just take 2 questions. So we have 2 gentlemen standing. Okay, great.
Sam bhaiya, 2 questions from that slide. Brokerage or fee you get. तो उसमें आपने लिखा था you get 30 to 40% success fee और आपने लास्ट में लिखा था carry में profit. So my 2 questions, one कि जो 50% आप इन्वेस्टर से जो भी आया उसका आप हमें कह रहे हैं कि आपको मिलेगा, बैलेंस 50 किसके पास जाएगा?
जो can I go back to that slide for a second?
Yeah, go ahead.
Guys, give me the slides back. Okay, I'll just go back to the slide. Yeah, हाँ जी, आप बताइए.
So the last column, max amount received by realtor, maximum possible. You said 30 to 50%. So
30 to 50, हाँ. So that 30 to 50% is of what? Of the amount which the fund gets.
Which is fine.
तो अगर 1 करोड़ था, 1 करोड़ का 3% उसको 1.5 मिला और आपको उस 1.5 में से जो फंड है वो 30 या 50% तक आपको पैसे दे देगा.
बैलेंस किसके पास गया?
फंड के पास रहेगा ना.
अच्छा, फंड अपने पास.
हाँ.
And you mentioned here carry fee on the profits. What about the loss?
हाँ.
If the loss happens.
हाँ, if the loss happens, इन्वेस्टर का लॉस है पूरा, तब आपको नहीं मिलेगा. वो प्रॉफिट पे ही मिलेगा ना, लॉस पे थोड़ा मिलेगा. लॉस पे आपको कुछ नहीं देगा.
कुछ देना तो नहीं ना.
So for that reason, that due diligence is important. नहीं तो आपको you will be happy with the 3 to 7% which you're getting between the transaction fee and the success fee, and management fee at best you'll get for the first year. But if the company starts running into a loss, then obviously you're not going to get anything. So therefore, it is your even greed responsibility, commercial responsibility for yourself and the organization that you're representing to ensure that you take the person to the right place. मैं अगर किसी को घोड़े को पानी पिलाने ले जाऊंगा और सूखी नदी के पास ले जाऊंगा तो नेचुरली वहां जाके तो उसको वो पानी नहीं मिलेगा ना फिर, एंड आप घोड़ा नहीं चला पाओगे आगे.
Right.
Yeah.
Hi Sam, this is Udayan Mane from Pune.
Hi.
I am so glad that you brought this topic in this convention.
Thank you.
I could relate to maximum realtors out here that these commissions look so lucrative, but I have an experience to share. Me and my co-founders have started with small PropTech firm 2 years back, got shortlisted in Shark Tank for 3 rounds. Unfortunately, we didn't got funded, but the funds are really floating in market. And as a realtor, I think we all have some ideas in our head. We should just put it out, and there are funds which are ready to bank on you. And I'll meet you outside for the separate discussion. Thank you so much.
Love to do that. And guys, you're in the real estate business, PropTech. So if you have an idea, even your ideation, start up a startup. Because you can do that. And startup is not about, मैंने ज़मीन खरीद ली, Ashwin, I hope you're listening. मैंने ज़मीन खरीद ली और उसमें बना दूंगा वो startup है. नहीं भैया, वो startup नहीं है. Innovation क्या है उसमें? नया क्या कर रहा है? अपने पैसे मिल जाएंगे, लोगों से मिल जाएगा, आसपास से मिल जाएगा. But you will not get money from a fund or from a family office or from an angel investor or a VC for that matter, if it's not something which nobody else is doing. And remember, a startup is created for what? To remove a problem. If there is a problem and that needs to be addressed, so what does a startup do? It makes things easy for you and it removes a problem. When you see a startup like Uber, what did it do? You had black and yellow cabs or whatever color cabs all around, right? And then you had to wait for it. But Uber thought of a concept that let me put it on an app on a mobile phone. So what did he do? He balanced demand and supply. So imagine for a second if there were more drivers and less cars, or more drivers and more cars, equal number of cars, but there were less consumers, or there were more consumers and less cars, you'd have a disgruntled stakeholder on one of the two sides. So that equilibrium, aggregation, putting in that much of feeding exactly that many cars and drivers to the demand. So the demand supply mismatch, people will walk away. If Uber came into India and supposedly, what did they do initially? They brought in top A grade quality cars, not the average ones, average Joe cars that you see right now. And why did they do it? Because they weren't getting the other cars. They excited people. There was a shortfall because suddenly people wanted to take the cars. There's a shortfall, pick any car and bring it. Even if it was a Mercedes. I've driven on a Mercedes at the lowest price possible in an Uber because they didn't have any other car. But they matched my demand with an equal supply. So you've got to have a product which is matching that, and you've got to be that innovative. And all of us are very innovative people because that's how we've done our business. And let's just put it down into another stream, either doing business for yourself or helping somebody else, advising somebody else to do business. And you have a secondary income coming in. So you do not only support yourself on your main real estate play, but also in another class of asset. It's the same thing. You're just changing an asset class, nothing else. In fact, adding an asset class, which you can today in today's regulatory environment in India. Over a period of time, you may not be able to do it. Like you do for insurance, like you do for mortgage. Okay? So, thank you very much, guys. I'll be happy to answer any questions later.
I request you to remain on stage. Thank you so much for answering those questions.
Thank you.
I would now request Mr. Ravi Verma, the Chairman Emeritus in NAR India, to please step forward to please felicitate our dignitary.
Is it okay? I didn't get enough. 36.